Hey guys, this is Bruce Marshall from Simpler Trading with the nightly video update for Fed Day, Wednesday, September the 18th. And we had a crazy day today if you didn't see it. We all knew that the Fed announcement was today, Fed meeting, policy meeting. And let me show you this. We had, if you watch the CME Fed Watch tool, they were showing about a 75% chance of a 25 basis point rate cut, right? 25 basis points here. And so it was kind of, that was kind of a given, I guess, at that point. Strangely enough, if you were watching this the last couple of days, that percentage had come down pretty dramatically. Last week it was in the 90s, and then it came down last night, or the last couple of days, it came back down into the 60s. And I was thinking, well, I don't know about this. This is not looking very good. When it came back up this morning, it was a 75% as we were going into the meeting, 25% chance of no cut, right? So again, that was kind of I don't want to say baked in, but it was. And I had been saying the last several days or even weeks, and not only me, everyone's kind of thinking the same thing. Well, we're going to get 25. It's kind of already going to be baked in. It's probably going to be a non-event. And the bigger question is the language surrounding future rate cuts, right? And as we see, they came out today, the language was here's 25, there you go, here's 25, and we don't think we're going to have any more rate cuts this year. And we had a boom, immediate sell-off down here. Here's the decision was right here at 1 o'clock today. Sold all the way off to 29.78, and then the market did a little digesting of that move, and we got a rip higher. I mean, this is let me show you this. This is a pretty crazy move. So again, if you notice, and this is pretty typical. Initially, this has happened quite a few times. Here's the announcement. Boom, we get a rate cut. Oh, that's great news. And then it immediately fell, immediately ripped back up, and immediately fell again. And then we got into this bottom here, and I was doing the live trading room at the time when we did this, or when this happened, and I was looking at this, and I was going, again, we were talking about this in the room, and I said, you know what, this actually looks more constructive to me, because what you don't want to see is a flush down, rip higher, 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 like that, setting a pattern of lower highs and lower lows into a channeling downtrend, right? And we didn't get that. And I said this in the room, we were talking about the room day. So when we got this flush down, we were kind of building a base here, if you will, and it's not, obviously you can see it's not 100% accurate, because, where's the bottom? We can look at some of these candles that stuck down a little bit lower, so it's not exact science, but, we did break down through here, touch this level, and I had a level here at 29.76, I think, on the ES, and we didn't quite get there. But then off this, we bounced, caught our breath, bounced, caught our breath, bounced, caught our breath, and just higher. Ticks were really strong, so forth. So pretty impressive off that low. And again, I was actually listening to Henry into the close, kind of thinking the same thing that I was thinking, that this does not look like this. Let me get my pointer back up here. This was a pretty decent drop. I'm waiting, I'm watching. This initial stuff, take that with a grain of salt. We start getting the commentary here, and then boom, we take off, right? So I'm looking at this, and we were talking about in the room, and I said, this does not look like we're going to roll over and die, panic, run to the hills, sell everything. This doesn't look like it at all. We just came down here and consolidated. That's it. And then of course then we bounced off here. Now what Henry was talking about, and I agree, in the room today, Friday trip is quadruple witching. I think we actually may go higher into Friday. So the way that I'm playing it, and I'm already set for this, I've got to trade up at 30.45 on the S&P, and you know, it's so I'm positioning a little bit higher in the short run with some hedging on the downside. And if you look at this, we see that there's the all-time high right there. We're quickly approaching it. If we take that out, it could open up some more upside here. I'm fully aware that we could, do this at any point in time. So I do have a hedge on down here at, where's my hedge? Like 2,900. No, it's at 2,980. I'm right under here with a hedge. So that's kind of in my opinion, is a good way to do it. If we continue higher, I will kind of ratchet up stops behind it. And I am. If you look at all the moving averages, we're above all the moving averages. This is a bullish pattern. Until I'm proven otherwise, I'm still bullish, reluctantly bullish, because I know we'll get some kind of pullback here, but I'm playing to the upside with some hedging on the downside until I am proven wrong. And also keep in mind, we're one tweet away or one news story away from a big move in either direction. I think with the China news, the meeting in October and all that kind of stuff, that's going to keep the market, going up, I think, or at least not going down. As long as there's a possibility of a deal with China, I don't think we're going to roll over and crash. So I would not be too short this market. I would absolutely have some hedging on it, but don't be very careful of getting too short this market, because again, news at any second can continue to move us higher. So be careful. And I don't really have any trade setups other than kind of what I outlined here. As we get a little bit closer to earnings in the next 3-4 weeks, we'll be able to have a lot more setups, and maybe we'll have a little more clarity on the market as well. But for now, that's what I got. So I hope this makes sense and helps, and I'll see you at the next update. Take care.